Hi, I'm Joseph Rand with HomebuyerTaxCredit.com, your leading resource for information about the homebuyer tax credit. At our site, we get a lot of questions from visitors who post them to the blog or send us an email, and a lot of those questions have to do with investing. That everybody knows that that the homebuyer tax credit is not designed for investors; it's designed for homebuyers. But people are curious: can you use the tax credit to get a head start in investing in a property? And the answer is yes, but it comes with a couple of caveats. So let's talk about how to claim the homebuyer tax credit and still get your start in investing in real estate. The first thing you have to know is that you can't buy an investment property per se. You can't be living somewhere, buy a property, and then rent it out. The whole point of the homebuyer tax credit is that you have to be a home buyer that you're going to live in. It has to be your home for at least 3 years, or you have to pay the tax credit back. So don't feel like you're going to be able to fool the IRS. The IRS is going to be looking at this stuff very carefully. So, you're not going to be investing in property and then renting it out. But there are a couple of different ways that you can get started in investing in property and use the homebuyer tax credit to help you out. And the first one is you can buy a multifamily. A lot of people that I know got their start in real estate investing by buying a multifamily property, a 2-family, a 3-family, a 4-family, and what they do is they buy it, they live in part of it, and they rent the other parts out. Eventually, they rent out the part that they live in as well, and they go buy a new home for themselves, and now they have a fully fledged investment property with 3 rent-paying tenants. Well, you can do that and claim the homebuyer tax credit, so long as you are going to be living in part of the property. If it is a 3-family and you're going to live in one of the units, you can claim the homebuyer tax credit, assuming you're otherwise eligible and under all the other eligibility requirements. Now, there's one catch to that. We often talk about the homebuyer tax credit as being $8,000 for first-time homebuyers or $6,500 for repeat homebuyers or step-up buyers, long-time homeowners, however you want to phrase it. That's not quite accurate. The way the legislation is actually worded is that you can get a tax credit of 10% of the property value up to $8,000 first-time homebuyer or $6,500 as a long-time homeowner. For the most part, they're the same thing, because most people are going to be buying a home that costs more than $80,000 or $65,000, as the case may be, and so they're going to hit that 10% maximum fairly quickly. But if you're buying a multifamily and you're only living in part of it, you can only claim the tax credit for the part that you're living in. So let's say, for example, that you're buying a 3-family home, and let's say that the home that you're buying costs $150,000. Well, you're only living in a $50,000 home. You've bought 2 other $50,000 units to make up the $150,000 house that you bought, but you're only living in 1/3 of it. So the way the IRS will look at it is that you can only get a tax credit of 10% up to the property value of $50,000 or $5,000. You don't get the $8,000 tax credit that you would get if you were living in the entire building. You get a proportional tax credit for the proportion of the building that you're using. So if it's a 2-family and you live in one, then half of that property value is going to be attributed to the homebuyer tax credit. So just be aware of that so you don't think you're getting an $8,000 tax credit if the property you're buying is under $180,000 or so. So, and of course, remember, you have to live in the property. Now, another way you can get started in investing is if you're a long-time homeowner, you don't have to sell the home that you're living in to claim the long-time homeowner tax credit for the property that you're buying. You do have to live in the property that you're buying, but you can hold the property that you're living in now. Now, where might this come up? I can think of a lot of situations where somebody might be living in a small condo that they've owned for a while, they've built up equity in it, and they'd like to buy something bigger, and they'd like to claim the tax credit, but boy, it wouldn't be the worst thing in the world if they could take that condo that they own and rent it out. Well, you can do that. You buy a new home, you live in it, and you rent out the old home. Totally okay. There's no trick to it. The IRS has no restriction that requires you to sell your old home to claim the long-time homeowner tax credit on the home that you're buying. Just remember that you have to live in the home that you're buying for 3 years, or you have to pay the full tax credit back. So that's how you can get started in property investing, and I'm a big believer, everybody at homebuyertaxcredit.com, we're all big believers in real estate as long-term investments, and that's how you can get started in real estate investing and still take advantage of the home buyer tax credit. You can buy a multifamily and live in part of it, or if you're a long-time homeowner, you can hold on to the property, buy a new property so long as you're going to be living in the new property. We hope you found this helpful. As always, we'll remind you that if you're going to be claiming the tax credit, you should always check with your accountant first, but otherwise, if you have any other questions, check us out at homebuyertaxcredit.com or the homebuyertaxcreditblog.com, and you can post a question. We'll be happy to answer it. Hope you found this helpful. Have a great day. Thanks.